All right, legends, how is everybody doing? Let me know if you can hear me, you can see me in the comment section. Let's dive in through the pure Bitcoin technical analysis. The price continues to move to the downside, and I do believe that we should be going to lower levels purely based on the technical analysis, and we're going to talk about that in today's live stream, guys. Make sure to absolutely destroy that like button on your way in. Smash it up, guys. I'm always a few minutes late, so please forgive me. Let's go right away through the technical analysis in today's episode. But first of all, I need to say hello to the community. All right, so let's go right away, say hello to the wonderful people here in the comment section, and then we'll dive in through the pure technical analysis here, guys. I'm going to explain why there is high probability that we are actually going to get one more leg here to the downside, okay, and potentially come all the way down to around about $54,000 zone, where I do expect a severe bounce from that zone. Okay, I will be explaining with pure confluence levels why it does make sense that we actually going to hold the $54,000 area and get a significant bounce. Now the problem is, will that bounce be strong enough and start getting momentum to the upside, or will it be just a small little bounce? Of course, we'll be talking about shorting trading ideas, just like the one that we mentioned yesterday on the lower time frame. We needed the price to retrace at least to the 382 Fibonacci as a minimum requirement. Okay, 236 would be very shallow after this consolidation. We wait for that 382 50% Fibonacci zone, knowing that it is an invalidation for the bears if the price were to break above the 618 Fibonacci and this pivot low. So we waited patiently here, and we did see that rise exactly to the 382 Fibonacci. This was the zone to look for potential shorts and look for the lows to be claimed again. Of course, we got an extra drop with that movement to the downside. It ended up with a big, massive waterfall just very early this morning. This was 3 o'clock in the morning my time. So overall, with yesterday's analysis in the live stream, we were talking about this consolidation. I was happy for a local double bottom, speculating on an ABC flat, but overall, not the price not getting a push down as we were getting this confluence, as we were getting this consolidation at this high confluence level, right? Now, when we do see the consolidation here from yesterday, there was many reasons to believe that this area was going to hold in the short term to get a relief rally, at least to the 382, potentially the 50% Fibonacci from this drop. And that was purely based that we were hitting the 7/8 Fibonacci retracement from this pivot of the impulsive move that we had the last few days. We were hitting the 7/8 Fibonacci, getting a nice consolidation. But not only that, we were hitting the extension 1.618 from this wave 1 or wave A, right? We were speculating on the possibility that it could have been a wave A, and this is an ABC, and we're going to form a higher low. But as mentioned on yesterday's live stream, then we did not get that that movement to the upside. Obviously, the highest probability scenario was actually getting that move continuation to the downside. Okay, there was that speculation. Hey, what if this is an ABC? It was too aggressive. Okay, a C wave. Preferably, it does not hit the 1.618. Also, we got huge amount of volume, very common, okay, for a third wave. Usually C waves don't have such an aggressive move and volume. So we were speculating on the higher probability scenario that was actually topping out at the 382 50% Fibonacci zone, most commonly for that fourth wave, to then get the leg down. Whether that leg down was going to be short or long, we never know how strong that movement can be. There's a big question always on how can a fifth wave, right? How impulsive can a fifth wave be? And I can already tell you, just like the one we've seen here, that fifth waves can absolutely rocket, right? They or get a massive drop. They could also double bottom or create, basically a truncated fifth wave, right? Where you're just slightly shallow from the high. So fifth waves are very, very complex, but most commonly they do create, okay, a kind of a double bottom failed auction. They're usually not that powerful. The most powerful is the third wave. So now we come to the next step, right? yesterday. We're realizing, okay, price dumped. We're likely going to top out at the 382 50% Fibonacci zone to then get the next leg down. So now that we got this leg down, we need to analyze this situation. Now we need to analyze, just like yesterday, regarding Fibonacci, good levels of confluence such as daily point of controls, naked point of controls, and Elliott wave theory to analyze where could the price reach and where could the price basically reject, right? Looking for a short trade or even looking for a long trade as well. And this is what I want to explain in today's episode. As we got this 5-wave move to the downside, without a doubt, it's probably going to take at least 24 hours, give or take 1 or 2 days for this corrective move to complete. And now is where we need to analyze the waves and the most important levels, because yeah, without a doubt, if the price suddenly starts moving here to the upside very aggressively, are you going to start flipping bullish, right? Are you going to speculate that, hey, we are bullish, we're likely going to start breaking some major levels? Well, I want to let you know that it's unlikely. Any zone, any corrective move here has high probability in being a corrective move and basically rolling back down, okay? We'll go in detail through the levels on how the waves need to develop in the next coming hours so we can actually detect the next trading opportunity. Let's go first of all through the comment section. Like I said at the beginning of the stream, never did. Let's go right away. Frank, guys, how are you doing? Good morning, my man. How are you? Macero, hola legend. Andy, hello, my man. Matt, good morning. LA Meth, let's go. Fabian, hola. Chris Hardware, started up. Influencers all over the place talking about the 1929 economic crash. Man, it's exploding. Yeah, well, this is something that we were aware of many months ago, right? Where there's always the speculation that, hey, what if we are seeing something very similar to what happened back in 1929, right? The financial crack, right? That was a very, very deep depression, and it took many years to recover. Hey, it is definitely possible, right? We have a kind of an everything bubble situation at the moment. And when we do take a look at the Dow Jones, for example, right, for the last century, right? I was going to say decades, but it's actually century. And we take a look at the yearly chart, right? And we just zoom out. Hang on a second. We're not going to get it with this one. My bad. S&P 500. SPX. Sorry, guys. I'm just taking a look at the stock market because we're going to zoom out all the way back to 1929 to see what happened right over here. Let's go with the monthly chart because I'm on the yearly chart, and there's a lot of speculation that this run here to the upside is just, look at this. We've gone absolutely parabolic, but it just continues for decades, right? So this is a major parabolic move on the stock market, okay? It is very parabolic. And obviously this has to end at some point with a pretty steep corrective move. And we are talking about easily 30, 40, 50% like crash, right? It's just gone through the roof, and especially throughout the last few years, it's just gone parabolic. Just in 5-6 years, it's more than doubled, right? So when we go back to 1929 and you really zoom in onto the chart right over here, we had I wouldn't say a similar parabolic move, but it did go quite parabolic since the early 1920s, right? Early 1920s, we started moving extremely parabolic, right? So we were moving up for around about, yes, give or take 6 or 7 years in an extreme parabolic move. We don't really know because, like I said, there could be, we know the 4-year cycles for Bitcoin, right? We've got the 4-year cycles for Bitcoin. There's actually a 10, 15-year cycle for recessions. Are we seeing a 100-year cycle, right? Because, yeah, we're very, very much close to 2029, right? Will that happen? Will we kick the can down the road a few more years? Is it going to be exactly 100 years? Will it be 96 years? Will it be 90, right? 95? Could we be in a 100-year cycle? Well, it's just a lot of speculation, guys. What can we say? Without a doubt, we should be seeing a pretty sharp correction and like a kind of recession / depression in the next coming years. At some point, it's going to happen. It's inevitable. What usually happens, especially when we have interest rates so low and everybody's got free money and money printer and a lot of debt as well. We build on debt, every single country, and this is going to pop at some point. But speculating when that is going to happen, we might as well kick the can down the road a few more years, because we've been speculating for something like this for a long time, for many years. So, but overall, it is scary without a doubt. We had a very very big crack here that was a major crash here for over 2 years, and it did take almost over a decade to actually get the recovery and break the previous all-time highs. Just over 20 years in this case. It took 20 years to get back above from the start of the crash here, right? 1929 and 1954 is where we started breaking out the previous all-time high in the case of the stock market, right? So pure speculation. When is this going to happen? Eventually, we are going to see a pretty steep, deep correction at some point, guys. But for the moment, we are here. For the moment, we are just correcting and going to all-time highs. We never know when the official news is going to come out. So nothing that I'm going to spend. I know it's going to happen, so it's always good to have cash on the sidelines. I am deep into cryptocurrency. But I also have a significant amount of cash on the sidelines because, we never know. We never know. And once it happens, and it's going to start falling down very aggressively. So it's always important to definitely have a large percentage, right, in cash and not be full in crypto. There's a lot of speculation that Bitcoin is going to be different. It's going to be the moment that Bitcoin is going to decouple from stocks, from the economy, from gold, and Bitcoin's going to be the only thing out there, right? Very skeptical, without a doubt. Bitcoin will likely follow a major financial crisis to the downside. So not speculating that, Bitcoin is going to be the one and we're going to $500,000 or even $100,000, right, in the next coming months. Even though if we get a financial crisis, I think it would be very foolish to believe that, to think like that. Could it happen? Yeah, it could, without a doubt. Maybe there's so big inflation happening. We get the money printer going on and governments are losing control. The Federal Reserve is just printing like crazy. They're saying, look, we're just going to start printing like crazy, and we get inflation going through the roof again. And then obviously we would see Bitcoin absolutely flying because of that, right? But a lot of speculation, guys. We don't really know. I do technical analysis. I look for daily trading setups. And whatever comes, it comes, right? Just make sure to be happy with the fall and be prepared to any major crashes, to hold onto those losses, right? Because obviously you don't want to sell at a major loss if you do get a major crash, right? It's just not the way to go. What you do is you maintain and you hold for the next few years till it actually recovers. That's what I did back in 2018-19. We got the C19 crash. That happened very, very fast, right? It was a very fast crash, just a few weeks, and then we started V-shaping. So you just ride the storm, right? As they say, go through the storm. John, my man, Freeman, let's last shakeout says, yeah, probably last shakeout. We got the diamond reversal pattern. That is something that we are hoping on, right? It's kind of our last scenario here to believe that this is not bearish. This is very much still corrective, right? When you zoom out, right, it's very important to zoom out. That the big impulse that we had in January and February, where we're just having a multi-monthly, very sideways, downtrending momentum, which is really nothing to panic about, right? So we're still very much in a corrective range till we actually get a successful breakout beneath the low of the range, which previously we've just been getting liquidity, right? There's just been too much buying pressure at the lows, and it's been getting a major bounce. Could this time be different, right? The famous saying of this time is different. we definitely still bullish on the higher time frames. Okay, we very much bullish on the higher time frames. So yeah, we're just basically in a very, very large consolidation. There is speculation that this is a distribution. Is it an accumulation? We're just going to have to trade the levels, guys, and look for day trading, scalping opportunities, and try and scratch a few dollars off the market as we can every single week. That's the way how I see it, because trying to predict really higher time frame analysis is bullish, right? As long as we do maintain above this area, right, the 618 Fibonacci from this pivot low to the pivot high, as long as we do maintain this as a wave 4, it is bullish, right? But higher time frame is bullish till it's not, right? Till we actually get the breakdown. And when you analyze higher time frame, you are going to become bearish. All of the invalidation levels are going to be hit when you're already trading below $40,000. And that will be okay. Now the price is bearish. Are you going to be bearish when it's already down here? It's like, no. The bullish case did not play out, right? The higher time frame bullish case did not play out. So it is bullish till it's not. So this is why I really focus more on believing that higher time frame is bullish without a doubt. Higher time frame is bullish. This could be the low. Maybe we're going to create one more low. I still believe that there is higher probability on the higher time frame to be bullish, but it's till it's not, right? So this is why I like to focus basically on what is happening internally, right? We want to detect those trading opportunities and what's happening yesterday, right? Where we see and realize the different possibilities of the technical analysis, like, retracing to these levels. This is a good short, this is a good long, and just try and surf the market, right? And try and scratch a few dollars off the market doing intraday trading. If we can turn a day trade into a swing trade, then absolutely great. But overall, looking for those intraday setups, right? This is why you're here. So let's right away dive in, and I'm going to keep it relatively simple at the moment with this local range. And I didn't go through all of the comments, guys, but hello, I can see Mariela here. Hi, Mariela. Thanks for joining the stream. One of my most powerful moderators that I do have for the moment, because we had some moderator issues the last several months, and we got a few dropping off, as you do know. But Mariela is here. Aditya is also around. Chris, how are you doing? This is clear bull flag, pressed with its face into the dirt, building up pressure. Chris, I do also believe so. Higher time frame, kind of a bullish pattern, right? A bullish a bull flag. So yeah, I do believe it's a gigantic bull flag as well. Look, I can't get my words out today. How far is 𝗕𝗶𝗆 going down, brother? I have no idea. I have no idea of 𝗕𝗶𝗆, how far down. It was a crypto project that, there's a lot of strong belief in this one. A lot of people, macro bull 𝗕𝗶𝗆 people, saying that this one is just really not going to get a bear market. This is one that's just going to continue going parabolic with this strong uptrend momentum. There's a lot of people that saying 𝗕𝗶𝗆 is the actual future of crypto projects. So, but how far down can we go? I don't like this chart. I've been saying it for the last couple of months. I would never buy 𝗕𝗶𝗆 at these levels. I would never buy anything that the chart looks like this. Okay, never at this zone. It's just not a zone that I would ever buy. I like to buy when we are kind of rock bottom levels, right? When we are very much at the 2022, 2023 low levels. Been buying a stack of multiple different altcoins, and they are very much slight in a loss, the ones that I've been buying the last couple of weeks and months. But it's still something that I'm willing to hold, right, for the next coming weeks and months. It's just going to dip another 10, 20, 30%. Doesn't really matter. I've stopped buying for the moment. I've stopped buying because I've been going pretty aggressive the last few weeks, just because they look very, very good. But I'm very much aware of what could happen, right? The interest rate cuts happening in September. How is Q4 and Q1 of 2025 going to look like? I just don't really know. I don't really know. Nobody really knows. It's not looking that great. There is fear, But you know what they say, right? Buy the fear. So I've been buying the fear a little bit, and now I'm going to stop. I'm going to stop buying the fear for the moment, because we could see more downside without a doubt. Casper's Spooky Little Ghost. Hey Andy, how do you measure value area high and value area low on Tradingview? Value area high and value area low on Tradingview. Very good question. Very simple question. If value area high and value area low, well, depending on what range you are looking at. If we are looking at a higher time frame range, looking at the 4-hourly time frame and looking at the price action since March till today, right? Well, obviously, you would get the fixed volume profile. And the fixed volume profile, you want to get it from the start of a range. When you look at a pivot low and a pivot high, you know that from this point in February, you formed a gigantic big range. We actually got rejected yesterday from the value area low of this entire range, right? Very much aware of that being a lower high at the 59,600 range. Very much aware of that being a resistance, like mentioned yesterday. So how do you calculate it? You got the tab here on the left, right? And fixed range volume profile. Okay, you get a fixed range volume profile, and it's for a range, right? You would not get the range from an impulsive move, right? You want it from a range. This is not how you would want to look at a fixed volume profile range, because this is not a range, it is an impulse. Yeah, you can see a nice point of control here. But basically, when you want to detect high volume levels of volume profile, such as value area high and value area low, you would have to get a range. For example, this was a range right over here, starting from the 8th of August all the way here till the 23rd of August. So you know this is a significant range right over there. Okay, and that's how you calculate value area low, value area high of the range. You got the session volume profile as well, which is SVP. It's on indicators here, SVP, right over here, session volume profile. I have it here on the top left, and this gives you the value area low and value area high from the previous days, right, being the session, which are very, very good levels also to speculate on a large move, right? Yesterday on the Legends trading community, we mentioned that if we do lose the previous day value area high successfully, we do have a high probability that we'll be coming down to the previous day value area low, where we did find some nice support. Price did get a reaction at that level. So losing previous day value levels is likely going to get you that push throughout the next value level. Okay, there is fake outs as well, something that you want to be cautious about. So yeah, just a brief explanation there. I like to give those explanations to the people that are asking questions. There you go. You got fixed volume profile and session volume profile. Hey Andy, how do you read a CVD chart? You can join the Discord, guys. We got there's the free Discord down below in the description. There's much more time there. Okay, we've got Joe Rogan there. I want to talk about that video. It's from Altcoin Daily, a very curious video. But yeah, you got the free Discord down below. Make sure to tag me, tag Devil, the rest of the coaches. There's a big community right there. So even if you ask a question there, you will get answered. Okay, just join the Discord. It would be much better than actually doing this on the live stream. Okay, you'll get much more information in the Discord, in the free Discord. Okay, so make sure to sign up right away. Not sign up, just join. Market open is happening right now. We are going to see a bit of volatility. Okay, we do have the market open. Let's analyze the market open looking at the S&P or the Dow Jones. We got market open right now happening. So are we going to see a little bit of volatility? Not too interested. Just stay aware of getting into trades right now as we do get the volatility. Thanks, I joined. Absolutely phenomenal. Bybit and support is horrible in the Netherlands, not even a working page. I'm not sure if they do have restrictions on Bybit in probably yes, by the looks of things, but Bybit works absolutely fine if there's no restrictions. Okay, Bybit is for me my favorite platform for trading. It's it's been active for over 6 years right now, and Bybit for me obviously is the number one. Remember guys that you do get an airdrop okay, on Bybit just by signing up with a link in the description. It's an airdrop. It's a position of $500 USDT to trade any of these cryptos. As soon as you click the link down below, you will have to follow the steps, okay, and you get that airdropped, and you got a free position, guys, of $500 tether. Check it out, guys, on Bybit. Claim that free position and just trade the free position, right? You got a $500 one and a $200 one as well, because yeah, the $200 one is more for meme coins, very volatile meme coins, guys. You got Brett, you got 𝗕𝗵𝘆, Doge, Bender as well, Ben Dog. So you got the $200 one as well to claim. You got the link down below. Let's analyze the Bitcoin price, guys. Most importantly, okay, let's analyze the Bitcoin price here, because there are very interesting levels that I am very interested in. Okay, and I'm going to keep it extremely simple looking at Elliott wave theory. I do expect lower prices. Okay, I don't think this is going to be a very successful swing failure pattern. It is very much an attempt for a long position. If you got into that pullback like I did, I got into the pullback right over here, likely going to get stopped out at break even. I don't see much power happening here. We're probably going to be ranging for the next coming hours, or even try and attempt and break down. This is where I want to come to the next strategies that I'm looking at. But it's a valid long position if you entered at lower prices, right? I entered quite low, and happy to get stopped out just in case we do fill in that wick. Okay, well, this is just a dead cat bounce, and we're going to fill the wick, and that is where I'm interested in a double bottom, and I will explain why in the next coming minutes. But like I said, I don't think this is going to be a major successful level where it's an SFP, it's a higher time frame swing failure pattern where the price is just going to recover very aggressively. I do see the bounce of maybe a couple of $1,000s. I think it's possible, but overall I think this low is likely going to be claimed. Okay, it's very likely that this low is going to be claimed again and possibly go to lower levels, and this is where we want to be ready for a long position as well. Okay, we try to long big support levels, okay, even though if it's fast, if it's for a scalp or a day trade, it doesn't matter. We got good levels where we can speculate for a scalp long, and this could be even a swing long position. It's a level that we mentioned yesterday, and I want you to be ready for that level and realizing how we want to react. You know, how do we react at that level? Just like this one over here, it's a very much acceptable quick swing failure pattern. Was mentioning on the previous live streams, it's not the best level just because there is a lack of confluence at that zone. There is a big lack of confluence at that area where we just don't have many levels, okay, of confluence down here. Here at this level where we swing failure pattern, right? So I much prefer one that is slightly lower. This was explained also on the previous live streams. This zone, this first higher low from this impulsive move, is an incredible swing failure pattern level. It is exactly the $54,400, right? $54,500 range. This is a great, very similar to this. You get a reaction. This bounces, I don't know, what, $600, $700, $800? Come on, we can make some quick little gains with a $700, $800 pump. Okay, so there is reactions at certain levels, and this one is absolutely golden. And the main reason why it is golden, because it is where we have the golden pocket as well, right? From the pivot low, the 5th of August, to the pivot high. That golden pocket, 61865 fib retracement, is sitting exactly at that low. And I love lows like this on higher time frames. I love the first retracement lows. They're just classic for a quick reaction, liquidity grab, and you get a pretty significant pump of several $100s at a bare minimum. So I really like that level. Alerts are set, and I'm just ready to get into a quick scalp. I'll be happy with a move of $500. Just get in and get out. Because obviously we could be looking for a retest of the lows. You might swing failure pattern and come back down and create a double bottom, right? Or maybe even break down. So you want to be quick by taking profits at certain levels of resistance and just be very defensive. Because a lot of people would like to leave the position and be very hopeful that it is going to hold. Same thing with this low over here. And this is where I want to come to the next conclusion. All right. Looking at Elliott wave theory and analyzing that we should not get a huge, big, major drop of a few $1,000s in the next coming hours. It would not make sense till we actually get a larger bounce to the upside. And we're going to talk about the shorting levels and shorting scenarios. And we're also going to talk about the longing scenario, right? We talk about longs and shorts. We need to be aware that we need to be very careful with long setups when we are very strongly downtrending, right? We are fighting the trend when we're looking for long. So we want to be very, very selective with our long trading setups. For short setups, yes, the relief bounce could go to higher levels, but we will talk about the technical levels right away in the next coming minutes. So overall, on higher time frame, I do see lower levels, even though if we do get a relief pump, I do believe that we are going to go to slightly lower levels. And the best level, without a doubt, is that $54,000 to $55,000 range, right? Give or take a few $100s, but we'll be looking for that pivot low from the 7th of August to actually get a reaction. You also have a naked point of control, which was basically from the price action that we created on the 5th of August, which was very aggressive. So good naked point of control, exactly sitting at that low, slightly below that low, also with a daily level, which is a few $100s even lower. Okay, so big zone for a reaction, for a swing failure pattern, likely to, have high probability and profit, right, from that low. So basically looking at something similar to what happened here. You got a nice higher time frame pivot low from the 15th of August, and you get a quick reaction bounce. It is enough to just get in and get out here as we just hitting the highs, right, the local highs, and forming a little bit of a range. Now, that is a pivot low that might not be hit today, tomorrow, or not even next week. So we want to focus on what is happening today, what is happening in this range over the last few days. Get you prepared for a potential scalp day trade that could happen today, right? Just like the one that we mentioned yesterday. Hey, guys, I'm not interested in a short until we hit at least the 382 and the 50% Fibonacci. So we hit the 382. I did have my stop loss at the 618 Fibonacci zone, realizing that it's unlikely that we'll reach that level to get the continuation down to test the lows again. Risk to reward was not huge, but the probabilities being in the downtrend is obviously in your favor. Was interested in the long if we were to claim those lows, but we never got to claim the lows. We just formed a higher low with that price action. We were just about to hit those lows, okay, but we did not. We got a leg down here. I was looking for that wick to the downside, but we just got a major relief rally of $600-700, right, just a few minutes after. So yeah, basically jumped into the short position at the 382 Fibonacci. As mentioned, obviously shorts are in our advantage. We want to look for shorts on the bouncers. This is very impulsive. This is very corrective. This ain't going anywhere. This is just, if anything, it would have got a smaller move to the upside and then roll back down, right? You realize where the power is, and the power is to the downside. So you want to recognize where is your shorting zones on the retracements. And obviously that was just in between 382 and 50% Fibonacci. So let's talk about the next scenarios and the next levels. What would be looking for here? And the main reason why I believe that we are not going to break down successfully in the next coming hours until we do successfully break out first from the highs of this range that we formed today. We might be forming a small little ascending triangle here and then break out. For shorts, I think it's relatively early. On Bybit, yes, we did create this pivot high. It's kind of an acceptable short. I always talk about a dead cat bounce high being a good level for a swing failure pattern, right? It's always a good level for a swing failure pattern. You form a dead cat bounce high, boom, boom. Whatever price action happens here, whatever can happen, as long as you do not lose the lows and you're just ranging and not having to claim the highs, that dead cat bounce high is always a good level to speculate on a short scalp day trade scenario. It's golden. It's like 90% of the times, right, on higher time frames or mid time frames, they are respected, right? They are, a high from a dead cat bounce. It is respected as resistance, and you do get those pullbacks from those levels. So it did get a nice little drop of a few $100s, easy enough to get into a nice scalp short trade setup. Obviously with stop loss above the high of the wick, right? Whatever wick you have here, you can enter here and have a relatively tight stop loss just above the highs and, get a significant good risk reward with the drop. The main reason why I believe that this is not the lower high that is going to be the good trade for a breakdown. Could we test the lows? Yes, but I do believe that we're not going to break down successfully until we go to higher levels. And if we do come down and test the lows here in the next coming hours, I believe that there will be a pretty nice double bottom setup to claim at least the highs of this range. And I'm going to explain in detail why I believe that is the case. Well, it's going through Fibonacci and Elliott wave theory, just keeping simple how it would not make sense that that was going to be the case. Why, you may ask? Well, when we do take a look at the movements to the downside that has formed, okay, 5 waves, the 5th wave obviously being the most impulsive here, which is fine. As long as the 3rd wave is not the smallest wave, it is a valid count. So as we have had this 5 waves move to the downside, we can say that we have completed an A wave or a 1 wave, right? And for the moment, we're going to speculate that it's a 1 wave, right? It's a big 1 wave to the downside after forming this large, complex, right, corrective structure in this range. This is the first leg down that we have in breaking down the lows of the range that looks very impulsively. So we're speculating on a impulsive wave 1 in this case. And if we do take a look at Fibonacci from the highs of the 3rd of September, right, from yesterday to the lows, we have not even reached the 382 Fibonacci retracement, either for a wave A, for basically a wave A, or a B if this were to be an A and we're looking for a B here, either for whatever, okay, for a wave 2 basically. If this is a wave 1 and we're looking for a wave 2, we at least want to hit the 382, right? And most commonly in between 50% and 7/8 fib. So we've just only surpassed slightly the 236 Fibonacci. So meaning that this to be a corrective move and to come down and test the lows, it has very low probability that it is going to break down successfully with another move of $2,000, right? Because we've only retraced after a finished 5-wave impulsive move to the downside, just slightly above the 236. So you want minimum retracement levels, right? Being the 382, which would be very rare for a wave 2, okay? Wave 2 usually at least gets to around about 50% to the 7/8 zone. It could get pretty deep and it might look very bullish. It's kind of a trap zone, right? Wave 2s kind of trap you because it retraces all the way up to the start of the wave, and you're like, oh, this is probably going to reverse, and then it rolls over. So all the way up to the 7/8 is very much possible, which would be getting up to $58,800. Sounds unreal from these levels, but very much possible. So I want to see at least the 382. So your question here might be, hey, shall I? Well, then let's long, right? Or where should I long? Where should I put my stop loss? How can I get into a trading setup here based on the speculation, right, that we're going to retrace at least to the 382 Fibonacci? Well, obviously, this is where it comes very difficult. I already speculated in a long position, still in that long, and haven't got stopped out from that day trade long, looking for higher. It was definitely an attempt right there. Just got wicked out here. So yeah, the first level is this one right over here. The first one is right over here. And why was this a good possibility for a long? And it wasn't the greatest based on risk management. because I got into a very small position and I was very much aware of going to lower levels. But what was making me confident is a back test from that wick low, okay? We love back tests, guys. It's a good level where the price could get a reaction, right? And bounce. I did explain this on multiple different live streams, right? Where you have a pivot low on higher time frames and you create that failed auction swing failure pattern, in this case, right over here. So you got a pivot low, you get a major move down, failed auction, you come up and you back test that pivot and you get the bounce, okay? So it's higher time frame pivots after a swing failure pattern. They are back tested pretty successfully most of the times. So we were just coming down to that pivot low, okay? Not quite hitting it just yet, okay? But very close to it. And I was ready to add slightly to that position because it was a very, very small position. But overall, looking for the back test from that wick low, okay? From the 15th of August. Still did not hit it, but I was already got into 0.5% of my capital into the long, just got stopped out break even because entered a little late, okay? But it was definitely worth the speculation. I was ready to add to the position if we would have got, you know, a major reaction, bullish CVD divergence continuation here, because we did get bullish CVD divergence, but the bullish CVD divergence did play out already. And let me explain why, right? Let me explain the bullish CVD divergence that were happening here on the rest of exchanges. When we do take a look at the CVD, right? We could see on the rest of exchanges, we were forming lower lows. So we had the wick low early this morning. We're forming higher lows on the price action. So we got the higher lows on price action and we got a lot of selling pressure entering here on many exchanges, right? Many exchanges do see this as a dead cat bounce, and we're just going to roll over back down to test the lows of the wick, right? Which is very classic for the start of a larger ABC corrective structure, right? It's very classic to get the dead cat bounce and get people shorting to drop, right? To believe that those lows are going to be hit. And you can see on the CVD that you are forming lower lows. So you're getting confirmed with data that there is a lot of shorts entering here, believing that it's just going to be a move up and a move back down to the lows. And then what you usually get is that one wave, two wave, and, you know, at least to claim the highs again. And like an ABC, right? That's where you get the ABCs. You get a three-wave structure, stopping out, of course, all of the late shorts that are entering here, believing that the lows are going to be claimed. So what happened here is that the bullish CVD divergence target was hit, which is basically the highs here, at least on Bybit. I think on some other exchanges, the highs were not hit, but on Bybit, yes. So the target of the bullish CVD divergence is actually claiming this high, which was hit already. Okay, so that was that scenario here. And now is where we come to the next scenario, right? If we roll down, which does look like it's just not getting enough power, as we've only retraced slightly above the 236 Fibonacci from this movement down from yesterday's highs, right? If we do count this as an impulse, the second wave cannot finish like this, right? It can, but it would be extremely rare. So you'd want at least the 382 Fibonacci to be hit. Now, it's very hard and complex to manage risk here to suddenly jump into a long position because, you know, where are you going to put your stop loss? Are you going to put your stop loss here, or are you going to add to the position if the price goes against you, right? You need to manage risk like a pro here. So this for me is not an easy zone to jump into a long position. I am aware of the kind of ABC move here in the next coming hours. I am very much aware that the price could get a little bit of more of a relief pump, but I don't like the long entry here. I don't like it too much here. I would rather see the price at least getting beneath this low, and I would accept a failed auction from this low, or I would accept a double bottom from this pivot low. And I'm going to explain why I think a double bottom here would be great. We're probably not going to get it. We're probably not going to come all the way down here before hitting the 382, but it would be ideal. That is when I would speculate, of course, with an ABC flat structure. Looking at this as the A wave potentially, we're going to form a three-wave move down. We form 1, 2. We're getting the third one down now very aggressively, hopefully. to that low over here from the wick, and then look for the C wave. That could, as a minimum target zone, you would be looking for a sweep of the highs of today. So as a minimum target, right, it's already giving you a relatively good move. Potentially to go to higher levels, it could be an expanding flat, without a doubt. It could be very much, but over at least a minimum target at the highs here. So, and the main reason why I would speculate on this, on the flat, is because we haven't retraced at least to the 382. And for a wave 2 or a wave B, it doesn't matter, you at least want to get to the 382, right? 236 is extremely shallow. It would be extremely rare if the price drops a few $1,000s. Of course, that could happen. It might happen. It's just looking at the probability side, okay? It's highly improbable that we are going to break down a few $1,000s from this low without hitting the 382 Fibonacci. So this is where you come with the strategy and the conclusion that if we do come down to the lows in the next coming hours, then you would have to believe and think that this has a high probability that you are going to get that bounce to the 382 after creating a double bottom. And I like local double bottoms, depending if your analysis makes sense, because not every high and every low is a swing failure pattern, right? When you're downtrending, not every low and every from a downtrend is a swing failure pattern. You need to be very, very selective. If you try and catch the bottoms once they're tested every single time on a downtrend, you are just going to get stopped out every single time. So you need to be very selective. You need to use a lot of analysis and come to the conclusion that, hey, I like this double bottom. Why? Because we haven't retraced to the 382. And if we come down and test it, I'm very much aware that we could form an ABC flat. So I like the idea. I want to see a failed auction. I want to see a double bottom. I want to see the breakdown that is not successfully moving down to lower levels and get a reclaim of the low. And then I do see, obviously, that ABC flat scenario forming the C wave, at least to come all the way up to the 382 Fibonacci, which would be the first target zone. Now, this is a move of over $1,500. Now, this is going to take time to develop. All right, it's more of a day trade to swing trade. It could happen in just a few hours, but that would be a trading plan that I would be willing to take the risk only if we do create a swing failure pattern from the lows or a failed auction, meaning that the price action needs to recover above the level for me to be confident that I want to get into a long position, because the breakdown has not continued to the downside. As we are beneath this low, I would be definitely not interested in doing anything here at this zone, okay? Then we do have a daily level at 55,129, but it's a daily level that's kind of on its own, right? We don't have any naked point of controls, no major fib retracement level from the pivot low here to the pivot high of August. You could, it is the start of the 618 actually, okay? Let me correct on that. It is almost hitting the 618 Fibonacci, which is at $55,000. The daily level is at 55,100. So we are, yeah, I mean, it would be very aggressive. I'm not going to speculate on along there. I really want this low to be taken. That would be the ideal scenario. Yeah, overall, I don't see that successful breakdown happening. Okay, let me zoom in here back onto the lower time frames. And if we move down, it's just likely that we are going to form an ABC flat. So I need the failed auction. I do not want to see the price breaking down successfully from this low. Okay, I don't need it to go down to lower levels. I need it to test the lows and reclaim the level. And there is where I have this projected move, okay? This projected move to come to the 382 as a minimum target for a B wave or a 2 wave, right? Is what I want to see after forming 5 waves down. So I'm in the camp of, yes, I like the double bottom. If we roll down now to those levels without taking the 382, I'm interested. If we move to the upside now in the coming hours and we hit the 382, I'm not that interested in that double bottom, okay? Because we've already retraced here to the 382 as a minimum requirement, right? So we need to come down for me to get into that long before we hit the 382. If 382 is hit, I'm very much aware that, hey, maybe this is the ABC structure, right? Maybe this would be the ABC scenario, right? It could be valid, absolutely. Maybe it's already happening and then we're getting the pullback. If we're already crossing the 382 fib time, then we would have to come to the conclusion that, you know, maybe this was the end of this corrective structure in a wave 2 and we're going to start moving impulsively to the downside. Now, this is the challenging thing, right? Where can I short? Longs are pretty clear and simple for me right now. We roll down without hitting the 382. It's a beautiful long position if we do create the double bottom. So I know the long trading plan that I have here. So as I have the long trading plan, I want to flip to where the heck can I get into a short trade with high probability, knowing where to put my stop loss, my invalidation, and knowing the good entry and where I could be taking profits. Well, obviously, the take profit zone in this case would be coming all the way down to the lows, coming back down to the lows, and even looking for an aggressive breakdown, right? Where you're looking for an extra swing short position, right? You got a beautiful short trade here yesterday at the 382. You know, we said 382, 50%, you know, stop loss, basically your invalidation, which is this pivot. And you could jump to that short, you know, looking for the lows to be reclaimed and, you know, possibly get continuation to the downside as we have today. So now the question is, if we are in a wave 2, this is where it gets complex. It's not going to be easy to get into this. It's easier to get into a fourth wave because you know 382 and 50% is your most common zone, and you know that 618 and the pivot low of the wave 1 is your invalidation. You know the wave 4 is going to top out at some point, so it's very it's easier to detect, right? But when you're in a larger wave here to the downside and you're speculating on a wave 2 in this case, if it is a wave B, then obviously it's extremely more complex. Wave B can get all the way up to the highs of the start of wave A. So when we're speculating, getting a move down here, a little bit of volatility to the downside. We got some news also here, guys. Stay cautious with your trading setups. We have Jolt's jobs opening. We got Jolt's job opening here right now. That has happened in the last minute. Okay, so this is why we're getting a bit of a volatile move to the downside. I think the S&P 500 is also getting a bit of dumpy. So S&P 500 getting a volatile move down here. Yeah, we opened New York opened bullish and now bearish with the news. So we've got a bit of a pump and dump here throughout the last 30 minutes. I'm not interested in trading news. As always, I do not trade the news, guys. Just stay aware and away, because you never know how volatility is going to kick. So anyway, let's continue here with the analysis. Regardless, if we do go down to the lows, I'm still interested, even though if the news pushes the price down to claim that low. If we do get a reaction SFP, I'm interested in the long position. If we do, let me know if you guys can hear them. You probably got the drum and bass a little bit loud, guys. I think it's still good. So now is where the complex thing happens, okay? Now it's where it gets a little bit difficult regarding levels and where is the best shorting level? Where is the safest shorting level? We try, as traders, we try and trade the highest probability scenarios. If you are just getting into longs and shorts and think that you're going to get a bounce here, you're going to reject here, and you know, not doing proper analysis and have very good risk management, obviously long term you will fail, right? This is why I trade just a few times a week, only if I do get very high probability moves, because I know the market is here to take my money. It's not here to give me money. It's here to trick me and to take my money off me. So we want to be very, very selective with our trading setups. And the long is clear. Now the situation is, okay, I do like the possibility if the price, okay, and pay attention here, I do like the possibility that if the price starts breaking through from the range highs, this is when we're analyzing very carefully what the heck is going to happen here. Okay, is the price going to continue pushing to the upside? What kind of waves are we forming? Do we have any bearish CVD divergence from this pivot, right? This is where we're coming to the conclusion on where is the highest probability short setup, even if it's for a scalp, okay, or a day trade. And if we were right now, say that we just almost claim this low, would be nice to claim it, to be honest, but say that we claim the low here, and then we get a rise to the upside and we break these highs. I don't like very much the range high for an SFP. Always a range high can be an SFP level, but I think it will be very aggressive, just realizing that we can retrace at least to the 382. So I don't like this personally, even though I know we can reject. I don't like the possibility here of creating a swing failure pattern or a liquidity grab above the highs of this range. Just realizing that we can at least pump another few $100 in the next coming hours or minutes after hitting that high. So I'm not interested, me personally, I'm not interested in the liquidity grab above the highs of today of this range. I'm not interested. Even though if it does happen, even though if the price does do this, I'm not interested in taking the short. Just realizing that we should be going higher to the 382. We should. So could it SFP and then start rolling down? Yes, but I would take it with a pinch of salt. Be very, very cautious that the price could obviously retrace a little higher. Now is when I come to the conclusion of what waves are we in right now? Okay, so we've got the movement down. Can we count this? Okay, what is disturbing that on some exchanges, those highs were not claimed. Let me just double confirm that, guys, because on some exchanges, the highs of this range of today has not been claimed, right? When I take a look at Coinbase, the highs were not claimed on Coinbase of the dead cat bounce, which is very disturbing without a doubt. That's gonna make it a little bit more difficult for me to analyze the possible waves here. So what you would call, let me just zoom in on the lower time frames, guys. Yeah, this is very one wavy, so this would have to be an A wave. B, C. If we do, we haven't claimed this low. I would like it for it to be claimed. If the lows here were claimed, I would count this as a A wave, a B wave. It would be very long without a doubt. The question is, if we do pump up here, if the price pumps up from this, if this were to be the low or this one, and we're going to get that low taken, it doesn't really matter. But if the price does, say that the price pumps from here, well, obviously this has been the low. Now is when we come with the low, the high, and then the next high over here. Now the question is, how high can that movement go? Well, most commonly for an ABC, you have the most common level, which is the 1-to-1 105 extension. And if we take a look at the pivot low from the wave 5 to this pivot high to this higher low right over here, depending if this is going to be the low or we are going to form another low, we still need a little bit of more price action, guys. You know, like I said, the most important move is the next one, because if this were to be a low, we haven't claimed that low, then obviously we do have the 1-to-1 extension. Very rare you will get an ABC going to the 0.618 and then pull back. It could happen if the trend is very aggressive. Yeah, you could hit the 0.618 being an A, B, C. The C wave has just been 0.618% from the first wave, very shallow. The bearish momentum is too aggressive, and you're just getting the swing failure pattern in the end. Yes, it is rare. Preferably, I do not like it, but I understand that could be the case. 1-to-1 to 105 is the most common area for a C wave. So you would have to believe that obviously there is much higher probability. And looking at you know, the 1-to-1 extension for a corrective move. What I do like about the 1-to-1, okay, and this is where we're starting to see the magic. This is where we're starting to see the confluence, right? From the levels, we're getting a bit of a bounce right now. Bit of internal volatility, bit of a dump and pump. If we were to, this is a higher low, we break through the highs of the range and we get a pump. The best level to speculate on a short, internally the closest one, not the 382 for me. There's a lack of confluence at the 382. The main reason why 50% looks golden, which is at $57,600 range, is because we have the 1-to-1 extension, okay? It would be ideal, say that we do form a higher low here, we might just come down and then recover. Then obviously we'll take a look at the extension from that low. But if this were to be the low, it's not claimed, the price is pumping right now, and we break the highs, I would like to see at least the 382, which is going to be hit. It might get a small little reaction. I think it's very aggressive for a scalp short. I think follow through would be the highest probability. And the $57,700 range would be the best zone, in my opinion, for the short speculation, either for a scalp or a day trade, right? Just looking for a retracement movement of at least a few $100s, right? We never know if it's going to retest the highs again, form a double top, and then roll down, right? It can get choppy. It can get hard. A first hit and a pullback is almost guaranteed, right? It's almost guaranteed. What is not guaranteed is it going to be one touch and it's going to roll down from there straight away? Well, we don't know. It might just hit the level and it might consolidate, retrace, come back up, retest the high, form a local double top, and then roll down, right? Stop out all of those shorts, right, that are entering, form the double top, classic, right? It's basically a stop hunt from early shorts and then roll back down. That is what we will have to analyze once we get to that level. For the moment, we are pumping, we are forming those lows have not been hit. So this is the higher. This is the last low. It's not this one in the end, it's this one. So could this be the case in the next coming hours that we are rallying all the way up here? Absolutely yes. Definitely possible. So the main reason why this is the best level, it's the 50% Fibonacci from the entire drop from yesterday's highs after 5 waves. We do have an A wave, a possible B wave here, and if we do break the highs, we need to come to the conclusion that we are already inside of the C wave, and that is the moment that we speculate on where are we topping out, right? Where could we top out? And it might just double top here, right? Claim the highs of the range and come down. And you might think, Andy told me that we are going to this level or we should be shorting this level. No, it's the best level that I would consider for a scalp short, me personally, with the analysis. 50% Fibonacci from the drop, the 1-to-1 extension from here. If this is the confirmed low after breaking the high, we know that we could be very likely in the C wave. And the 1-to-1 extension is exactly where we have 50%. And we also see the lows, right, from the third wave. This is where we got the consolidation yesterday. That's where we got the consolidation yesterday. And those are the most important support levels basically from yesterday, right? We got a big support here at $57,600 to $700. So it's a confirmed support level with yesterday's price action. It is the 50% from the entire move down. And we got the 1-to-1 extension if this were to be the low. So I like the level. It makes sense that the price is going to get a reaction and it's going to reject from this pivot. So what do I need to do? I need to wait for that level to be hit, right? So as we do create long and short opportunities as a day trader, what I do inside of this range is wait for the levels to be hit. Trading is extremely boring. Trading is not exciting. Of course, it's exciting for a lot of people because you have the rush of, making money, right? Making a lot of money fast. And on the other side, it's the complete opposite, right? If you do not know how to trade and do not know what you're doing and you're not managing your risk, it's losing money fast. It's losing money fast instead of making money fast. So you make money very slowly and in a very boring way. So what you need to do is just wait for your trading plans. I've got a trading plan here at the low. If we hit the low without hitting the 382, I'm very much aware of that ABC flat. It's just highly likely. It's just going to get a bounce. It's going to be a liquidity grab from people that are longing. And then it's just very likely going to get that bounce to the 382 as a minimum zone. So I know my entry, I know my stop loss, and I know my target. If I do get stopped out, the stop loss is extremely small. The profit, the risk to reward is extremely large. It's 4, 5, 6 times larger. I haven't measured it. It really depends on the wick low that we form here. But you get the point, right? I am risking here the stop beneath the low of the wick, and I'm looking for the 382 to be hit. So you're at least at a bare minimum looking for a 4-to-1 risk to reward. So I've got the trading plan for that scenario. Of course, this one at the 50% is going to be a little bit more complex based on stop loss because, hey, this is not a topping maximum target zone for a C wave. This could extend to the 1.618. It could just fly through the 50% Fibonacci. So it's a very aggressive scalp regarding where to put your stop loss. If we do break out, if we do get a small quick reaction at 50%, you want to enter. The most simple stop loss is just put a stop loss above the high created, slightly above $100, $200 above the 50%, and take the shot for the pullback. It's really, if you break through 50% Fibonacci, you are likely going to go to the next fib level, which is the 618, right? It's what usually happens. We got higher time frame Fibonacci levels that we talked about throughout this major drop that we had in August. And here is where we were talking about the next fib, the next fib, and the next fib. You got 382 Fibonacci from this drop of August. 382, beautiful reaction. We got a drop of over $1,000. If we break 382, you don't want to start thinking of shorts here. The next level is 50%. You did trade there for several hours. You got a nice 4-hourly order block right there. If we do zoom in, we do see that there was a reaction and a rejection from 50% Fibonacci, right? You did see a small little rejection. It was just a couple of $100. Yeah, more like $400, $500 on the 4-hourly. Just a quick pullback. If you break 50% fib level, you don't want to be in any shorts here. You're going all the way up to the 618. That is the next fib level. That's where we got the rejection, right? You can see how higher time frame impulsive moves when you got a clear high pivot high and a clear high pivot, clear pivot low. 382 reaction, 50% reaction in the place, and then you break 50%. You 618 golden pocket. That is where you got the proper large rejection. So when we do zoom in here to this scenario, right over here, and we analyze, hey, what if 50% Fibonacci is broken? Well, am I going to insist that we are going to top out here and I'm just going to add to the short position and then what the price action does. This is a classic stop loss zone. This is a zone that we're going to talk about, why it is a good shorting level. It's a classic. You enter the short, you're adding to the position, expecting a rollover, expecting an ABC move, and then you just get the absolute god candle that gets above $58,300, which is this high, and it just creates a big, massive move, right? You get people shorting, and then you get a kind of a big move up in a matter of a couple of hours and basically claiming the highs right over here. So 50% stop loss, don't keep it too crazy if you were to short that level, okay? You need to be aware of a double top scenario as well. I'm interested in double tops if we do maintain resistance at $57,700, where we have this level of 50% and the one-to-one extension. I'm interested in double tops. I'm interested in the first hit. I'm interested in the second hit. If you fail, right, to break above the high, it's a good zone to speculate on a day trade short. And it might be a swing short. It might be the top, and it might be the moment where the price does roll back down. Now, other scenarios, price enters a V-shaped recovery kind of price action, right? We just sit on our hands if the price suddenly is getting a huge short squeeze, boom, 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 right? And it's just bang, 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 and it's just moving up very aggressively. I sit on my hands. These are no events for me, right? When we get these major drops, I'm either inside of the trade already and taking profits, just like this one here at the 382 Fibonacci. I'm not going to be in any trade here inside of this movement. I'm either inside of the trade already or and taking profits, right, at the lows in this case. And if I've got a little bit of position open, I'll leave it as a swing trade just for fun, right, to see if we do go to lower levels. But these big volatile moves, I stay away from these big volatile moves because you never know where the price is going to end, right? Where it's going to get a reaction and it's going to end. However, I know where the price will reject, okay, based on confluence and based where there is liquidity, which is that famous wave 4 level, right? When we do take a look at the extension, just for speculation, guys, I don't know if we are going to come down to the lows or not from here. But if we do start breaking the highs and it gets very punchy, I think it's unlikely that this is going to happen. But if it does, we need to have a plan, right? Because this is a moment where people are going to try and short based on the downtrend, but it might create a little bit of a short squeeze scenario. So you want to be very, very dangerous if the price suddenly is very, very strong and breaking up here very aggressively. And you want to have a plan. For me, this would be a no trade zone. Of course, 50%, I like it. It's a trade zone, all right? You got the quick reaction retracement, or you got a double top possibility, or you got a breakthrough. It doesn't do absolutely anything, right? You have to manage risk very, very well, slightly above the 50%. If you break through very aggressively, where is my next interest zone? It's at the golden pocket from the entire drop from yesterday's highs to today's lows. Golden pocket, guys. We love golden pocket, most respected Fibonacci retracement. Now, this golden pocket, where it is, if this were to be the low, when we take a look at the extension, the 1.618 is exactly where we have these highs from yesterday, these lower highs. It is slightly above the 50%, but it might just be a wick, right? Golden pocket is not a perfect zone, okay? 61865. You can wick slightly above it. You can just hit the 618 and retrace. But it's a great, great zone. This is why this pivot high, whereas wave 4, which is classic for an ABC to be hit, is a great rejection point. I've got the alert set ready if the price suddenly moves up to that level, which I think is unlikely, okay? But I want to be ready. I know it's a level where I would get into a short scalp without a doubt. Without a doubt. Golden pocket from the highs of yesterday of the movement down. If this were to be the low, it's where we have the 1.618. Even though if we do create another low here, then even better because the 1.618 will lower into the golden pocket. So if we drop down now and we form a higher low here, which I would be very skeptical to enter along, guys. This is really not a zone to enter along because I'm very much aware of the ABC flat. I don't want to be entering longs if we start dropping down here aggressively. But if that means that we're lowering the B wave, and if we do bounce and break the highs again, then perfect. We got the 1.618 exactly where we have the 618 Fibonacci and where we have the wave 4. So not interested in longs here, just because I'm aware of the flat. I'm aware of that low. I'm interested in that long. I think that's absolutely golden, that double bottom. But this is why B waves are very complex, because they could form a flat. It could retrace all the way down to the lows. So this is why it is very, very difficult to get into a B wave, because you can retrace to the 382 Fibonacci, or you can even dip below the start of the A wave. So it's like, wow, it's very, very complex. So you would rather wait for the next move, right? And the next move is either you come down and form a flat, or before hitting the 382, or you form a higher low and you just have to go with missing trade. But you got another plan here, right? It's plan after plan. So when I do take a look at this possibility, we can see how this is such a great golden level, right? It's a golden level. It is the lower high that we formed yesterday, speculating on a wave 4. Wave 4 is a classic level to be hit in an ABC corrective move, and it always gets a reaction, okay? It doesn't usually break through, okay? Not always. It's my bad. I should not say always, because it's not always. Most of the times, it gets a reaction, especially when you have this confluence of 618 and the 1.618 extension. Okay, so yeah, I like that scenario. It's going to be a great short scalp. I'm in for that trade. If we do not get an SFP and we just suddenly break down very aggressively here, guys, because I know the B scenario flat structure is without a doubt a great setup. But be aware that the price could break down. And like I mentioned before, if we do break down from here, if we do break down from the low suddenly, and it happens that we did not retrace to the 382, it's just looking at the probabilities. If we do break down, I got a level where we are likely going to get a bounce. And that is this one right over here, right? We love this level. Same scenario, golden pocket. The first higher low from this move. We got a naked point of control from the 5th of August, high volume node on the volume profile. Absolutely golden level, guys. The alerts are set, so I would be speculating on that level. That is basically it for Bitcoin, guys. Oh my goodness. It will go lower to 54K area. Yes, absolutely. Without a doubt, I am bearish. I do see the price going lower. I'm very much aware of a bounce, first of all, guys. I'm very much aware of a little bit more of a pullback. But yeah, I am bearish, and I do see the price dropping down here in the next coming days, if not today. Very much. I do see this pivot low being hit. Okay, so time to short all the way down. Yes, absolutely. Absolutely. I mean, be careful by shorting here at the lows. Be careful on slight little short squeeze. Remember, guys, the prices do get the bounces. They do get the retracements, right? You do get those retracements. Okay, we are at the lows. I'm worried about you guys. Okay, I'm worried. Do not short here at the lows, and if you do so, make sure to manage your risk. Manage your risk. Okay. Be aware of big short squeeze. Be aware that could happen. All right. Be aware that the price could get a pullback. All right. A bounce or a correction and then roll down again. Just to be aware, guys. Join the Legends community, says Aditya. Absolutely, guys. You do have the first link down below in the description if you want to join the Legends trading community, where we go through daily updates and scenarios. Me and the rest of the coaches. Mariella, how are you doing? I got my mother here, Jackie Wood, giving support as always. Hopefully my mother has smashed up the like button, guys. Smash up the like button right away. Guys, if you do enjoy the education, the technical analysis, the levels, the scenarios, the setups, the entry points, the stop losses, and the target zones that I am looking at here for the next coming hours, not the next coming weeks, the next coming hours. It could happen today, it could happen tomorrow. This is why you're here. This is what you get when you subscribe to the channel, legends. Let's go right away. Bernardo, in Tradingview, the second one is the lowest low, not the first one. On Tradingview, is that, yeah, I'm not sure if you are 500 range for daily. We're dumping still. Yes, sir, we are dumping. We are moving down. We are moving down. Yes, we are. We're very rangy for the moment. We're very, very rangy. So, got range lows and range highs. I'm very skeptical on the possibility of a test of this low and create a swing failure pattern and then move up to the range highs. We did get the dead cat bounce highs and moved down to the range lows. Can we claim the range lows and move up here? Not the greatest one. Not the greatest high probability trade setup. But it is there, right? Unless we form insane bullish CVD divergent continuation, right? Which is not the case, at least on Bybit. Bybit's gone absolutely nuts here with the longs. So, yeah, Bybit's gone through the roof with the long positions here throughout the last few hours. So we're not going to form any bearish CVD divergence on Bybit, unfortunately. We're very far away in forming lower lows. But yes, on the rest of exchanges, could we form some new lower lows right there as we claim this low over here? Absolutely. It's definitely possible. Make sure to pay attention to CVD just in case we form lower lows from the wick low. Then that would mean that there's a lot of people selling here at this range, wanting the price to hit the lows. And that is the moment where you could get that short squeeze relief pump, at least to the 382, right? So I have to say it's a possible setup. Okay, wouldn't be my favorite. I'm very much aware of the ABC flat. So I'm a little bit skeptical on hitting that low and getting the reaction. If we form insane lower lows on the CVD and we get a reclaim, it's a dangerous long position, guys. Let's be honest. But the target zone would be at least the highs of the range, right? And the 382 from the entire drop. I don't like it. I'm going to remain patient, guys. You know, we're not getting into every single trade that we see that is very close to us, right? I'm going to wait for the strategies, the plans that I've mentioned on the stream, claim the low for an ABC flat before we hit the 382. If we come up here the 382, I'm obviously already speculating on the ABC, and I'm looking for 50% and the 618, and that is the zones where I would be looking for the short, okay? So let's go right away through some news, guys. Make sure to destroy the like button. Remember that you do get that exclusive bonus for bluffing. Bluffing has a 10% cashback on your initial deposit, guys. Great cryptocurrency exchange. There's no KYC, so just with an email and a password, you can start trading in minutes, guys, and you get 10% cashback from your initial deposit so you can use for your trading. Check out this, guys. Follow the steps and use the link down below in the description where you can claim that 10% basically initial deposit, guys. Trade on bluffing, no KYC. Check it out. Let's go through some news, some scenarios. Liquidity, we can go and take a look at the liquidity. We still have a lot of liquidity beneath $56,000. Yes, there is quite a lot of liquidity still there, guys. So we could go to lower levels. I do expect lower levels after a relief pump, unless the pump is going to be crazy and we get a V-shaped recovery out of nowhere. I stay away if the price is pumping like crazy. Just stay away, guys. There's nothing to do to fight a major dump or a major pump that has very strong volatility. The best thing to do is not do anything till we form a range or a smaller reaction, okay? It's super important, guys. If you want to FOMO into the pump, it's not the best deal. We know that we have wicks and liquidation events and lots of pumps and dumps and dumps and pumps. So just be very careful when we get that volatile move that you want to jump into a trade, all right? In either fighting it or either joining it, because it's not the way to go, guys. It's not the way to go. We want reaction levels, consolidations, be patient, be very, very, very patient like I am, right? Don't you think I'm a patient guy? I'm very relaxed. I'm very patient on looking at the levels, right? Till we hit them. Be patient, guys. I know trading can be very exciting for a lot of people, right? But it does not have to be like that. It should not be like that. Let's take a look at some news, guys, a little bit. We got over $1 trillion was wiped out from the US stock market today. This was basically between yesterday and today. We got over 1 trillion, guys, between Apple, Nvidia, and Microsoft and many other larger stocks down very aggressively. Over 1 trillion. That is the entire market cap of Bitcoin. Okay, even more than the entire market cap of Bitcoin wiped out in just 24 hours on the stock market. This is also why Bitcoin is getting that aggressive move down, right? We have Japan's FSA proposes a tax cut taxes on crypto profit from 55% to 20% and allows loss carryovers. Absolutely great to see from Japan. Just then we have 13.2 billion Kanto CEO says big banks and traditional finance will all go head first into Bitcoin under better regulation. That's what is going to happen, and it's coming. You can check this video out from Bitcoin Magazine on X, and obviously it's inevitable that you're going to see the big players, institutions, like he says, all go head first into Bitcoin. So nothing to worry about. The short-term volatility to the downside in the next coming weeks, the past few weeks, next coming weeks and months, it is all going to be bought back up, guys, at some point. Not to worry. 40K, 30K, bring it on. We are going to buy those Bitcoin at those levels, right? If we do get the chance. Hopefully we will. So not to be scared, be excited. If Bitcoin goes down to 30K, it's going to be a gift. It's going to be a gift from the Lord that you are going to get a great chance to get cheap Bitcoin at $30,000. This is why I'm in doubt that we are going to go down to even $40,000, never mind $30,000. I'm in doubt, guys. I'm not sure if we will get $40,000 Bitcoin. It would be an absolutely golden ticket opportunity to get some cheap Bitcoin, right, for the next near future. What is very interesting is Google searches for the term Bitcoin hits the lowest level since the beginning of the year. Interest is down from retail, from people not searching Bitcoin on Google. Remember, we don't have even 4%, I think, of the entire world population that is in crypto. We would at least want to see, for mass adoption, 20% of the entire world using Bitcoin and cryptocurrency. I think it's around about 4%, maybe it hit 5% the last few months. The very, very small amount of the world is actually in Bitcoin or using Bitcoin, right? Very, very small amount using Bitcoin and cryptocurrency. Interest is down. Of course, that interest will come back up once we smash through all-time high. As always, right? It always happens. It's the same. It repeats on every market, every cycle, every investment. It's the same thing on. And this will happen eventually at some point in the next coming months and years, or I don't know when, right? It has to happen. So if we do get saved from the big, massive depression, multi-year depression, something similar from 1929, we're going to see an energy crisis. There's going to be no money. There's going to be businesses and the housing crash and everything bubble, and we're just going to have to suffer for many years, right? Who knows, right? You're much aware we live in a crazy world. That we are completely controlled by the big players, so anything can happen in a blink of an eye, guys. We could wake up tomorrow morning and everything is playing out, right? Everything is crashed. This is what happened. Every recession is the same, right? Until you see it on the media, they decide when they're actually going to pull the plug, right? And say, now we're pulling the plug, right? Just like the C19 crash, right? In 2020. Now is the moment that we lock them in their houses now, right? And they do that in just a few days. And they have complete control of the situation. So anything can happen at some point. I don't care. No, I don't care. It's going to happen at some point. It will happen when it will need to happen. Bitcoin ETF, big outflows. My goodness. Yesterday we had insane outflows. $287 million of outflows yesterday on the Bitcoin ETF. Absolutely crazy. We got a lot of outflows yesterday. They are selling the dip, right? Instead of buying the dip, they're selling the dip. We do not want to do that. We want to buy the dip. They've been buying while it was pumping, and they've been selling while it's been dumping. This is for the last few months, which has been pretty. Whoops. So it's been pretty crazy, pretty nuts. Yo, Andy, what's up, Russ? My man, how are you doing, Russ? Hello. Mariela, Aditya, always giving power. Not smart, not so smart money after all. It doesn't look like it. No, they're selling the dip and they buy the pumps. When Bitcoin pumps, the inflows go crazy. When it dumps, it's been dumping for the last few days. We only see outflows. It's like, hey, it's the other way around. You know, it's the other way around. Fear and greed index is at fear, of course. Still a lot of fear. Could we get to extreme fear? That's when it's going to get very interesting. Maybe if we do go down to $52,000, it's going to start getting into the extreme fear. That's going to be looking very interesting. Could we complete this very ugly diamond reversal pattern? Is it possible that we are in the formation of a gigantic reversal at the end of September, entering it into October? Should I say, right? September is known as Rectember. October is known by Uptober, where it's extremely bullish, usually, not only for Bitcoin, but also for stocks on average. October is usually a good month. Are we going to see the same, guys? For the moment, September is in the red by almost 4%. Are we going to see October being 10, 20, 30, 40% gains, just like we've seen throughout the last few years? I think so, guys. I am a major Bitcoin bull, higher time frame Bitcoin bull, without a doubt, as everyone is, right? If Andy shows his biceps in the stream, BTC will pump. All right, get ready. Get ready, because it's coming. There it is. You asked for it and you got it. Could be bigger. It could be bigger. Ain't that big. But there is something. Rectember. Yes, we do have Rectember. We have it here. Let's pump it. Did we get the pump? There we go. Bitcoin's pumping as I was showing my biceps. You were right. You were right, Pratesh. As soon as I showed my biceps, we got the Bitcoin saying, holy crap, what the heck? Let's pump it up. Thank you, legends, for joining the live stream. There's not much more to talk about today. We've gone through the pure technical analysis levels and scenarios for Bitcoin, levels of interest that I'm looking at in between today and tomorrow. Make sure to trade safe, and I will see you in the next one.